even if you're mega bullish on Bitcoin, you should be something like 60 or 70% invested in Bitcoin. That's it. You should never be beyond that, right? Never, ever, right? Why? Because if it totally crashes, you're going to want to pick some up. You want to have some dry gunpowder, right? Do I think that there will be another crash in the next 5 years? 100%. There's going to be, we are living in a very unstable world, right? The financial world is unstable. $35 trillion in debt is 122% GDP is unstable. There's a lot of things that are unstable now with this world. You shouldn't play with fire. What you should do is you should take some percentage of your net worth and just put it in Bitcoin and literally not touch it until that thing is 10x.
Fred Krueger emphasizes the inherent instability of the financial world today. With $35 trillion in debt equating to 122% of GDP, he underscores the precariousness of our global economy. This instability isn't isolated to traditional markets, but extends to volatile assets like Bitcoin. For investors, it is imperative to prepare for future financial crashes, which he believes are inevitable within the next 5 years. Fred advises against going all in on Bitcoin despite its potential for massive growth. Instead, he recommends using frameworks like the Kelly criterion to allocate a sustainable percentage of one's net worth to Bitcoin. Even for the most bullish investors, Fred suggests limiting Bitcoin exposure to 60 to 70% of one's portfolio. This strategy not only mitigates risk, but also ensures investors have liquidity or dry powder to capitalize on opportunities during market downturns, such as acquiring distressed assets at bargain prices.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Holding Bitcoin and having leverage with it is unstable. So you have to allow for a lot of instability in this world. And I think it can be positive, right? It can work to your advantage. And that's why I would recommend people not be 100% in Bitcoin, right? I think, we've talked about this kind of independently, using the Kelly criterion or some other criterion, but you should be something, even if you're mega bullish on Bitcoin, you should be something like 60 or 70% invested in Bitcoin. That's it. You should never be beyond that, right? Never, ever, right? Why? Because if it totally crashes, you're going to want to pick some up. You want to have some dry gunpowder, right? Maybe you're going to be able to buy some crazy miner for, a third of the price of the mining equipment, I'm reading this book on John D. Rockefeller right now. And, he got really big in 1872. And there was this crisis in the oil world. And basically he'd walk to these other refineries and he would be like, okay, I'm going to buy you for 1/4 of the cost of your equipment. And people would be like, well, why should I sell to you? It's because you're either going to get that and you're going to grow with me, or you're going to get nothing. I'm going to wipe you out. Your quarter is going to go to zero. So if I were you, I would just sell to me. And everybody did it. And he was right. And they actually did very well. The people who did sell to him did very well because, I just think you need to have dry powder. And other, and also personal things can happen to you. You can get divorced, you can get a lawsuit, you can get hit by a car, a lot of things can happen to you. So, we're just living in especially now, we're living in a very uncertain time. And I think you need to plan accordingly. So, part of that comes with being a little older. I think I think one of the strengths that founders have who are, are in their 20s or in their 30s is they take these crazy risks and they're not aware of how big a risk that they're taking, right? They're taking just this crazy risk, and they're betting everything on, you know, on number 12, and number 12 comes up. Leverage is going to get you in trouble every single time in Bitcoin. Like everybody who blew up, they all blew up because of leverage, right? That's why they blew up. And I think, you know, the only thing, it took me a while to really understand A, Bitcoin, the value proposition, and B, you know, how to play Bitcoin, which is you do not trade Bitcoin. And, you know, I do think that the one thing that gets people is this leverage, and it's just completely unnecessary because, you know, if I don't care how much big your stack is, you really do not need to borrow 2x on it. There's just no reason to do that, right? And it's pretty simple math. Bitcoin can drop 50%. It can, and people are like, well, it can't drop 50% from here because it can only drop 50%. Well, you don't know that. It can drop 50% from anywhere. From any point, you have to have the belief that Bitcoin can drop 50%. And even if it's at the bottom of the support of some model, it can still drop 50%. It's a highly volatile thing, which can drop 50%. So if something can drop 50%, now it also tends to over time go up a lot. It is a very high performing asset, right? But it's an asset that can drop 50%. So if you are leveraged 2-to-1, there is a non-zero probability that you are going to get completely and utterly wiped out, you know, over time. And, you know, it's amazing how many people didn't get that memo. Just over and over and over and over again. That, you know, I'm going to dart in and out. I'm going to be smarter. I'm going to wait. Well, you all these things may be true, but you're playing with fire, and you shouldn't play with fire. What you should do is you should take some percentage of your net worth and just put it in Bitcoin and literally not touch it until that thing is 10x.
Fred ties his discussion of financial and technological trends to a broader theme, the importance of probabilistic thinking. He believes that understanding concepts like variance, stochastic processes, and basic statistics is crucial for navigating an unpredictable world. For example, when running online advertising tests or assessing investment opportunities, having a solid grasp of probability can provide valuable insights. Fred's background in mathematics and statistics has enabled him to make better decisions in both professional and personal contexts. He encourages others to develop this skill set as it equips individuals with a framework for understanding variability and making informed choices in uncertain environments.
I definitely think that anybody who's thinking about the future and is not really factoring in that 10 years from now you're going to have quasi-sentient AI is very mistaken. Because I definitely think that it's moving so much faster than we ever expected. And look, ChatGPT is only 2 years old. You know, so you know, in 2 years we went from, oh, this is like there's some cute sort of images to this thing you really can't code without this thing now, right? I'm using ChatGPT more than I'm using Google now. You know, I just use it for everything. You know, any question I have, you know, I just ask ChatGPT. Any tech support question I have, you know, interpretation, I give it a graph, interpret this graph, you know. So
you talk to it as well?
I don't do the talking part. But look, you know, there's this notion right now that ChatGPT is somewhat hobbled, right? Because it can't kind of go out and it can't send emails. That's going to change pretty quick. You know, it'll be able to, you know, send emails directly. Like, you know, great, send an email to all my family and friends on their birthday, right? You know, the personal assistant part of AI, I think
And it's
is
such a, I mean, they're so close to making a lot of amazing things that just, blows my mind. And some other companies are like way behind. When you send me an email and you say, let's meet tomorrow, I'm like, every day I open my Outlook client and I'm like, why the hell can't you extract this event from the email? So it's such a simple thing, but you can imagine a future where ChatGPT is going through all of your emails, filling your calendar with everything you're planning to do.
This will happen in the next couple of years. I mean, it's not even
the coolest part.
It's not Jules Verne kind of like someday they're going to be, this is happening in the next couple of years. Like, since I got the 17-year-old, I'm very interested in I'm sort of telling him, this is kind of the way I see your life, and that's like, do you want to be a coder? No, maybe not, but you better understand how AI is going to change whatever you end up doing, right? Because you're going to need to understand how to work with AI, and that's going to be critical. I did I've done a lot of work in online advertising, and I even posted a little thing. I don't even know where it is anymore. Had it on Medium somewhere, but it's just like basic sampling theory is so useful as far as like, if you're going to run an online ad test, did it work? Should you be running more of it, or should you be stopping, or how many ads do you need to run before you stop? You're trying to sell a gizmo on the internet. How many gizmos do you need to sell before you know the cost of with some accuracy the cost of getting to one new order, right? And a lot of this stuff you can really make some very quick rules of thumb that work really, really well, right? Just using sort of approximation of the binomial distribution with like the central limit theorem with normal and but this is a way you can approach most things. Most things are not deterministic. Most things are stochastic, right? The universe is not determined, right? Bitcoin goes up, goes down. It has a variance, right? And so I think this way of looking at this thing stochastically and understanding this variability of something, if you don't have basic probability and basic statistics, you have no framework to understand that. It just
exactly.
It's you're handicapped,
and that's kind of that's kind of
more that it's more that's useful, and not so much the simplex method, which you probably won't use these days, but the understanding the framework for all this stuff is super useful. And I keep on finding uses for it, like just the mathematical framework all the time.
Fred concludes his talk by addressing common mistakes that investors and entrepreneurs make. One of the most significant errors is underestimating risk. Younger founders, Fred observes, often take enormous risks without fully understanding the potential consequences. While this boldness can sometimes lead to success, it frequently results in failure, especially when compounded by leverage or poor planning. Instead, Fred advocates for a balanced approach, take calculated risks, maintain financial reserves, and focus on long-term growth. By following these principles, individuals can avoid being blindsided by life's inevitable surprises.
Please like and subscribe my channel.